everyone, it's Invest Diva and your coach Kiana. Danial, welcome to Diva on the Block, where we take you to the back streets of this whole blockchain, Bitcoin, and crypto shenanigans to help you get a better understanding of what really is going on and how you can take advantage of it. Today, I'm super excited to have Michael Casey, the chairman of Coindesk's advisory board and a Wall Street Journal veteran. In this episode of Diva on the Block, we'll discuss trust issues on the block, how Bitcoin stands on something far bigger than what you've been thinking, and what international problems blockchain technology is really solving. Let's rock the block. Michael and I met at a blockchain event, and I was instantly attracted to his knowledge about the technology behind blockchain. And I thought to myself, I must have him on the block. Michael Casey is the chairman of Coindesk's advisory board. After 18 years at the Wall Street Journal, he is now at MIT Media Lab's Digital Currency Initiative and also consults for businesses on the challenges and opportunities in this emerging technology. He has authored 4 books. My favorite ones include The Age of Cryptocurrency, How Bitcoin and the Blockchain Are Challenging the Global Economic Order, and The Truth Machine, The Blockchain and the Future of Everything. Michael, welcome to the block.
Hi, Kiana. Thanks for having me.
So tell us a little bit about your background. How did you get into this whole blockchain thing? And just walk us through.
Yeah, so we actually never met, but I, covered Forex, foreign exchange, for much of my life. And so I was aware of some of your work back in the early days of currency trading that I was covering. Back in the, pretty much from the year sort of 2001 right through to 2015, a lot of currency coverage. I lived in Argentina for a while, so that became a defining part of it, but a lot of macroeconomic currency coverage. So in about 2013, I went to write, I used to write columns. I was a columnist for the Journal writing about macroeconomic themes, and I stumbled across Bitcoin. I thought, that's an interesting topic. Let me write about that. And I looked at it. It was at the time when the Bitcoin price was spiking because of the Cyprus crisis in 2013. And I wrote a very ordinary column. It was just, what is this weird thing kind of column, basically. I had no idea what it was. I didn't understand it. I didn't write a terrible column, but it was average. And then I got invited out for dinner, really, by a number of fairly prominent leaders in the space, entrepreneurs in the Bitcoin space. And I was stunned at who was there. They were, prominent, successful venture capitalists. There was also a former head of the CFPB, the interim head of that, Raj Date. There were, so Barry Silbert was there, Jeremy Allaire, a lot of folks who've become very much leading lights in this. And that's when the penny dropped, as we say in Australia and Britain. The light bulb went off, where I suddenly realized that what was so interesting about this was not, in fact, that it was a currency that might challenge the dollar or yen or whatever that everyone thinks of it as, but rather there was an underlying system for tracking exchanges underneath that didn't rely on a centralized record keeper. And I suddenly saw that Bitcoin stood for something far bigger than everything that we were thinking of. And it became very relevant to me because I'd lived in Argentina for a long time and seen the complete breakdown of that financial system because of the absence of trust in how Argentina manages its financial institutional architecture with its people. And so there was this dependence upon these institutions that had failed them, so the trust had broken down. And the idea that the record-keeping function, which is absolutely critical to all institutional management of money and value, could now be actually managed not by an entity that I would have to trust, but rather a broad decentralized network of parties using a protocol that none of them could control. That became really exciting for me in the context of everything that I understood to be the problem of these developing nations. So I got very interested in not really what it means for us in places like the United States, but much more in terms of the opportunities that lay in places that have very much broken institutional structures. Latin America, which I was very familiar with, and Southeast Asia, where I spent a lot of my time as well. So that's really what got me into it, the interest in the developing world solution. And that's it. Down the rabbit hole I went, like lots of people do, and you start to open your eyes to a whole range of other trust problems that exist in society and in our economy, and how some of these concepts could be really valuable for resolving them.
So that I absolutely agree with you, and that's the reason why it really resonated to me, because I'm from Iran, and that is where I was like, okay, if my dad was just had all his assets in cryptocurrency back in the day during the revolution, he would have been okay. Like, he wouldn't have lost all his money to the government, and it really does solve a problem that I would say a lot of Americans don't understand or don't relate to. But there's also a lot of trust issues with the blockchain technology itself. We have hackers, we have frauds and scammers and criminals using it. So how do you see this kind of balance out? Like the trust? Yeah.
No, it's a very important point, because you're essentially transferring the trust that you have in an institution, a government or a bank, or some other record keeper, to the protocol, right? You have to trust that, and the reality is that what's happened, in the sense that the protocol and all the kind of applications that are built on top of it are not yet at a level where it's easy for people to interact with. It's easy for them to store their keys, or easy for them to build exchange systems. And so what's happened is that these other new forms of third parties, these new trusted entities, have come on the top of that and have started to provide services. And that's where the hacking happens, right? It's not that Bitcoin has been hacked, or that some of these other bigger ones have been hacked, but rather that the hacking happens at, yet again, another institutional problem. So I see this as an evolution. The reality is, it will take some time before we push this technology out to a level that it can scale and be accessible to everybody on a mass level. And that's very disappointing to people, because they just think, I must have it now, right? We live in this age of expectation. But think about how long it took to develop the internet from being, something that we all remember not the 28, but the 14.4, ports per second. The
I remember
it would take you to watch some picture just sort of eventually hit the bottom of your screen as it downloaded.
Yeah.
Right? All of that network capability, and that was actually relatively far on in the process, because the internet was first being built in the 1960s, the very beginning of the 1960s. So it took 60 years to where we are now. And unfortunately, the thing about blockchain technology is that not only is it something where everyone's expecting value now, there's money on the ground, right? There's actually literally money, because Bitcoin is worth something, and so forth. And so there's an enormous amount of pressure and scrambling for activity. And as a result, I think stuff gets rushed out, and there's attacks and hacks. But this, by the way, is just how, unfortunately, we learn. This is the very nature of open, a self-healing system. This is a complex system with nobody in control. Where we lose is part of the failing fast process, and there's an enormous amount of open source development going on to solve many of these problems. So I tell people to have patience. I tell people to just put a little bit of risk money into it. Whatever you feel like you can afford to lose, just to be comfortable with it, to have some exposure to where it's all going, to get used to it. But yeah, I mean, it's still volatile, and that's the inherent nature of this early stage development that we're in.
So again, like, I remember back in the day when internet and email was becoming popular, and my parents' friends were like, why would anybody use an email? Just send a fax. Or like, it was so boring. And now you're like, who uses fax, right? So definitely, you have a point there that things can evolve, and we definitely do need time. But the point that you made, that right now, because like these third-party entities are coming in to make it regulated, it's kind of an irony. It's like a catch-22, because people want the third parties to feel safe, but these very third parties are creating all the problems. So do you think that when blockchain does become mainstream, we're eventually gonna really see no third party involved at all, and it's just gonna be peer-to-peer distributed?
Well, there's no such thing as a trustless system, right? We need trust. In fact, it would be terrible if it was just an AI machine running all of our interactions, that there was no capacity to actually build value. I think that trust is where the value gets extracted. So it's really complex. You've got to think about where the business models will come in. The minute a business model is created on top of this, there will be some level of trust. What we are trying to do, though, is to automate away all of the opportunities for excessive rent seeking and the gatekeeping roles that can really lead to monopoly power. I mean, we have a very broken internet system with, Facebook and Google and Apple and Amazon, essentially
Yeah.
running the entire internet, right? And that's because we haven't been able to figure out how to trust each other to work. So we needed something like a blockchain, 30 years ago. Instead, we didn't get that, and we ended up having to build these intermediaries in the middle of it. So we will, I think, get to a point where the user experience is better. There's a much stronger cryptographic protection of our private keys, and there's a much better and easier key recovery mechanism, which is important. And there will be scalability. That is to say that the system will actually be able to handle a lot more transactions than it does now, which will also add to the user experience. And much of that will be decentralized away, because you'll have smart oracles that are blind to where the information is coming from, but are cryptographically proven to be true, and a whole lot of math that you can use to bring security in a more user-friendly environment. So we will get to a point where a lot of the actual straightforward value exchange is going to be more peer-to-peer, but there'll be services that will continue to be important. We need to find each other, for example. So market making as a function, hopefully not in a rent-seeking way in the way that Wall Street operates, but rather as market making as a service, will become something that we continue to rely upon. Find me a buyer, find me a seller, right? And if not, step in the middle. Those are still things that I think there's a critical role for a bank or for another financial institution, for example. There'll still need to be people who make things that are pretty and easy, and content that matters, that is essentially a part of all of this as well. There's always going to be somebody on top. What we want is a model in which no single party can amass enough power to take control and manage take control of my data and my currency, essentially.
I think that's a really, really great point. So I know that we're running out of time here, but I know that you're now very deeply involved in the blockchain and you're advising a bunch of people. So can you tell us a little bit background of what exactly you are doing in the field?
Yeah, I really have an eclectic interest. So at MIT, where I've pared back my time to launch my own company, I'll get into that in a minute, but what I was doing, and I'm still indirectly involved in, was systems for managing financing of energy projects. So we have basically a proof of concept and a protocol that we're testing out, a pilot in Puerto Rico, where there is a school that has installed a solar grid to basically generate its own power and provide that to the school, and also sell it back to the national grid. And what we've built is a smart property system on top of that, so that lenders external to that can essentially own the asset, or can collateralize loans against that asset. And as the school pays it down, eventually it flips and the ownership shifts. And that's something that you can start to automate through IoT devices and so forth, but you need a blockchain in the middle of it to allow for the sort of decentralized transfer of value. It means that essentially, rather than having to depend upon the Puerto Rican government's borrowing capacity, which is very bad at the moment after its crisis, and have essentially politically contingent financing for big infrastructure projects. Instead, small entities can borrow anywhere in the world from from social impact investors and whoever, who will own this asset that can be proven to be renewable as a resource, and can be managed in this automated way to protect their investments and therefore maintain a low cost of financing. So it's a smart collateral system, and I think it's really exciting because it's potentially the way for us to unleash financing for small infrastructure projects like this all around the world, which we desperately need to do, because basically we need to ramp up renewable energy usage, and we need to do it from a bottom-up perspective, not a top-down perspective, and that's really what we're trying to do with that. the other thing I'm doing, I've launched a company. I'm a media guy by training. I came out of journalism. I've done a lot of time like this in front of a camera, and so as a result, I'm also getting back into media. We're launching basically a company called Streambed Media that is going to use certain aspects of blockchain and cryptocurrency technology to unlock financing and allow creators to more actively engage and incentivize their audiences, and therefore build whole systems of value that don't depend upon the Facebooks and the YouTubes kind of as distribution platforms. It rather it's a mechanism for value creation that's kind of independent of all of that.
Is it similar to Brave or basic attention token?
There's certain similar principles to Brave. I'm a big fan of the whole idea behind the basic asset token. I think that there's a really important principle there about how you can. There's a data exchange. The user deserves to be rewarded in some way for their attention, and there needs to be a lot more sort of reliable metrics around how that attention is being applied so that brands can pay the right price. So a lot of our tech has similar thinking around that, but we're very much focused on combining crowdfunding, which is a way to bring investors who like content to also be, truly invested and have skin in the game and earn revenues for that, and NFTs, non-fungible tokens that you can redeem in return for doing things that build the community, sharing and liking and being engaged. And so it's a way to build a network effect of value separately from the network that we're used to thinking about, the distribution platform.
Very cool. No, that's really so. I'm getting an understanding that the main usage of blockchain that you're focusing on somehow goes back to finances or economy. Is that the only usage that you think blockchain is going to have, or is that just what interests you because of your background and where you've been focusing on before?
I think financing is how you extract value, it's the lubricant for everything. So inevitably, I think if you're going to do business models that are going to fly, a financing piece is a great way to go. But if you think about both of those two examples I gave you, financing is one side of the equation. The other side is the verification of the data, right? So you can't lend against the solar microgrid unless you know that the management of the data on the other end, is it truly renewable energy that is how much has been generated, and has the payment actually been made, and who's it going to, and so forth. That data piece also needs to have veracity. It needs to be proven, and data is like a currency. So sort of managing, sequences of data is something that you can think of a blockchain doing. So I kind of see the two things going together, and the same applies to this. Streambed, one key part of the Streambed system is storing the data around the creator's rights. Who created it, what date, what's it about, and what are the payment terms that you would demand if somebody uses it, and storing that into an indelible setting like IPFS and a blockchain structure. That's one side of the equation. So yes, finance is critical. I'm drawn to it. It's part of my background, but it's also, I think, the lubricant, as I say. But there's so much interesting stuff that also happens in terms of non-financial data veracity. And as we move into an IoT world with all these devices moving data back and forth, there's going to have to be a layer that gives some truth to all of that without depending upon, again, some centralized entity sitting in the middle of all those billions of transactions.
No, that makes sense. So I'm going to ask you one last question that I'm going to ask everybody, actually. And that is, I know that you wanted to talk more about the technology and the blockchain behind it, but if you were to just choose one of the 2,000 cryptocurrencies out there, which one is your favorite at the moment?
I just nodded it. I'm the most unlikely guy to have on this show. I just don't like talking about the investor side of the coins. I don't like it. That's just not what I do. I will say one thing, right? And that is that the best coin may have nothing to do with the quality of the coin. It will have as much to do with the size of it's community. In the same way that VHS beat Betamax, right? Betamax was supposed to be a more superior technology, but more people were using the VHS standard, so that became the standard. I would argue, in this sense, you probably know where I'm going. I'm a believer in Bitcoin. I don't think it's necessarily the ideal system for the world, but it has a far bigger, more engaged community, a much bigger network effect around it. Its critical mass is going to be just important. And I think it's very hard to go, if the one use case that I think Bitcoin has already proven and will just prove out even more is that it will be a competitor to digital gold, to gold. It will be the digital gold, that it will be a store of value. People argue that because it's so volatile, it's not really a store of value. That's a sort of a temporal thing. I think from its actual qualities in a digital sense are a far more superior version of gold. And therefore, because of this critical mass that I'm referring to, like, why is gold gold? Why wasn't it diamonds or something else? It's a historical accident as much as anything else, right? It has all the qualities you want, fungibility, durability, all those things. But it was really just that it happened to become the standard. And so I think that Bitcoin's in a similar position. So I think that it's smart for people to own Bitcoin on that bet. As to all the other ones, I don't know.
Right. You're basically
volatile. And I think also, like, betting on one single blockchain, right? Don't think that there's going to be one smart contract solution for everything. I don't think it's going to work like that. There's going to be communities that are drawn to different structures. So in fact, one of the biggest bets may be on whichever systems are trying to figure out interoperability across those different platforms. And there's lots of those interoperability plays. The answer may not be X blockchain, but X interoperability solution that allows us to move across more than one chain. That's really where the holy grail lies, I think.
Right. Yeah, that makes sense. I mean, I agree with you. I don't think Bitcoin is the best by far, but you're kind of saying that the community behind it, and because it's already mainstream, is probably, and because it's got the brand, it's probably going to get stuck as the mainstream. My argument to that as well, we had MySpace, and then Facebook came and completely crushed it. But I mean, I understand also where you're coming from. Thank you so much. I'm so happy that you were able to make it today. Thank you so much to take time out of your busy day to be with us. And thank you everyone for joining us and watching. And then we'll see you on the blog with the next guest next time. Can you make a silly face so that we can make a thumbnail?
That's compliant.
Is that okay if I use that for the thumbnail?
If you like, yeah, it's fine.
I mean, if you want to make another.
Fine, you can do that. That's okay. I'm happy with that.
All right.
I'd probably like to see what it looks like before you actually, like, if it's really just horrible, then maybe. But I mean, as long as it doesn't look like I'm drunk, that's all. I don't want to be Nancy Pelosi out of this.
You're gonna be fine.